see my screen. So diving right in, so this lesson today was just about crypto regulations, compliance, and regulations. So the key pointers or the key questions that I thought to share is that does crypto need regulations? Of course, we look at various global approaches to regulation. And of course, I'll be focusing more on the US because that's the key driver on what we're talking about. Of course, Russia as well, and also European Union. So just to acknowledge all that are present here before I dive right in. So let me just see whether I can just admit new people as well as I get to start. So I can see Elizabeth, there is Simon Toto, there is Kevin, there's LC, there is Elizabeth, and then there is Carol Joki. So thank you very much for taking this time on Saturday morning to learn. For sure, you're going to get value. That's what we are driving at. Decrypt Edge is what is giving you this value. We are focusing on providing you all the needful, important information on matter cryptocurrency beyond, of course, the hype that is going on around. So as we go on, one of the founding principles of cryptocurrency is that it is decentralized and it is unregulated. That is what, of course, it's out there. People know cryptocurrency is it's decentralized, meaning there's no central control. That is what it's been. So the US government is not too worried about crypto founding principles, and other countries as well, because of course governments have all sorts of resources to observe, to monitor, and to do everything. But of course, crypto has offered another kind of challenge. So cryptocurrency as regulation has been a frequent point of interest lately for the US lawmakers and government agencies. So early this month, there was a $1 trillion infrastructure bill which was passed, actually it was passed by the Senate, which includes provision for crypto regulations passed to engage. Okay, so what it happens is that this bill was going to be, it's actually a key stepping point in terms of regulations, and that of course stems from the Securities Exchange Commission that is headed by Gary Gensler, who of course talked about the SEC's role in regulating digital assets. So all these things we're talking about is all about digital currencies, things that are not physical, things that are not tangible, but of course they are electronic value. They hold electronic value. So that's why they're called digital assets. And that's why the SEC is very interested much on this particular industry. So SEC, for those who are maybe new, SEC is the equivalent of Kenya's Capital Markets Authority. They are just tasked to license to give guidance and also to basically just ensure that there is fair play within the country on investors and also the government. So that's what the SEC role is. SEC in full is Securities Exchange Commission. Russia has theirs, European Union has theirs. Every country has their own kind of authority to regulate and to offer guidance on such a ecosystem. So across Russia, decentralized cryptocurrencies are considered a type of property. That is what Russia considers cryptocurrencies to be. So which should be reported for tax purposes and cannot be used to pay for goods and services. That is as per the law in Russia. So as I said, we're going to compare the US, Russia, and the European Union. That is what I'm going to focus on. So as per the news, as per this CoinDesk, which is a news agency, you can see there it says Russia to introduce rules for confiscating crypto. That was actually, I think, in July. So part of the laws in Russia is that if you are seen or if you are caught paying for goods and services in cryptocurrency, you may be liable to be charged by a court of law. That is what Russia is, because they consider cryptocurrency as a property. So if you move across to the European Union, that was back in July 2021. The EU Commission unveiled a proposal to beat financial crime by increasing surveillance on cryptocurrency exchanges and forbidding anonymous crypto wallets. That is what the EU is kind of aligning itself to. They are, for them, they are more focusing on surveillance on exchanges, and of course, they are forbidding anonymous crypto wallets. Anonymous meaning you cannot transact without the basic what you call KYC, which is know your customer, and that is what crypto basically is one of the key elements that cryptocurrency is proposing. You can transact anonymously without anybody knowing you. So that is what crypto says. So key points to note from the financial, from the European side is that their tax, or rather their compliance and regulatory proposal is focusing to beat financial crime by putting regulatory pressure on cryptocurrency platforms. These, of course, includes crypto exchanges, crypto wallets, all that. So they are putting regulatory pressure on those platforms. So the new amendment raised privacy concerns as it allows users to be tracked and transactions to be traced. So of course, with surveillance, of course, you have to be tracked, and in this case, transactions has to be traced, and that's where now you find that regulations, which of course, when you are traced, somebody knows how much you are selling, how much you are worth. So of course, to introduce a tax law will be very easy once you are traced. The other point that the EU is focusing on is that they are focusing on stricter rules that will address financial fraud and help the development of the EU crypto industry. So as you can see, all these three countries, or three continents, rather, they are not really fighting it. They are just trying to align themselves on which is the best way to approach the whole ecosystem. So in summary, all these countries, of course, they all have similar key areas of interest. Number one, they are focusing on stopping cryptocurrency crime and tax evasion. That is number one. Number two, of course, they are focused on stablecoin regulations. I'll be talking about stablecoin regulations in the next point. And then number three, of course, they are focusing on exchange regulation and surveillance. That is number three. And then number four, the potential for investment vehicles like crypto ETFs and other funds. That is what they are basically focusing on. Because crypto ecosystem is quite huge. It touches very many aspects of the current finance. So for many crypto enthusiasts, the decentralized nature of digital currencies, which unlike traditional currencies, aren't backed by any institution, government, or authority, which is actually a big draw. So regulatory guidance can help protect investors. Of course, as much as I like decentralization and lack of government involvement, I'm glad that they are paying attention because, unfortunately, with cryptocurrency, there's a lot of scams. So anything that is not really guided, that is new, of course, there are very many people who are taken advantage of, because you have no place to benchmark whatever you are getting into. So that's why scams really thrive, because they come with a very high expectations of course, returns. That's where now all this has to be in place. So if you focus on cryptocurrency crime and tax evasion, so under the new law, of course, the US infrastructure bill that was recently passed, companies that facilitate crypto trades would be required to report tax information about those trades to the IRS. So just as brokers of traditional investment like stocks do. So of course, let me just admit some new people to the meeting as well as we continue. So as I was saying, just as a traditional investment like stockbrokers report all their doings and tradings to the SEC, the Security Exchange Commission. In Kenya, I think we have the national is it the NSE, yeah, and then also we have the CMA. So this is where now the US is focusing on this bill, and of course, even the EU, even Russia, I think even Australia, they are focusing on ensuring that all these companies that facilitate crypto trades would be required to report tax information about the trades. So, as I said, one of the key people, or rather the key companies that are offering a crypto tax service is called cointracker.io. Say the bill is generally investor friendly because it makes crypto tax compliance easier for investors, says Shehan Chandreska, a CPA, of course, a graduate and the head of tax strategy at cointracker.io. So, in short, it shows you that people are aligning themselves. Nobody actually wants to. You can say no one is refusing to pay taxes. They just want to be guided on how to do that. So, continuing. This means that exchange would provide a record of taxable events on the platform, like how much your Bitcoin was worth when you bought it and when you sell it back to the US dollars. So today, only some exchanges report this information. And this is what now I think most governments are focusing on. They want to focus on getting that data to them so that at least they can, of course, if there's a tax bracket, you'll be involved into that. So this will significantly reduce the crypto tax filing burden, as per the same company that is a cointracker.io. So just before I forget, remember that if you have any question, if you have any comment, just put it on the chat so that at least I can cover it later when I'm done with the session. So in completing this part of taxation and regulations, it is already important to keep your own records of any capital gains or losses on your crypto trades, which you should report on your federal tax returns. If your country more so provides you that avenue. Unfortunately, in Kenya, we have no system in place for you to report your crypto gains and trades. Of course, we are far from that. But of course, if you're in the US, already you have that avenue for you to declare. I think it's more. We call it a self-tax assessment. That is what it means. So regulation would make it more essential, since the IRS would more easily be able to find any cases of tax evasion related to crypto. So that is with that. So moving forward, let's look at stablecoin regulations, because these are a very key element, and I think Gary Gensler is very keen on this particular aspect. So Gary Gensler, the SEC chairman, has talked about increased stablecoin regulations could help the cryptocurrency crime problem, as the majority of what happens on crypto exchanges and platforms is cryptocurrency to cryptocurrency. So what it means is that everybody who is trading within this ecosystem, they are mostly trading within the cryptocurrency exchanges. They are not trading within the dollar Bitcoin exchanges. So that is what why stablecoin regulations is very important. And I'll be defining what stablecoin in essence means. So Gensler says that by passing the involvement of the US dollars in direct crypto trades, bad actors may be more able to evade public policy measures and other sanctions aimed at preventing money laundering or tax compliance. This where I'm reading. Maybe I can take it again. So you can see Gary Gensler says that by passing the involvement of the US dollars in direct crypto trades, bad actors may be more able to evade public policy measures and other sanctions aimed at preventing money laundering or ensuring tax compliance. So that's why it's very important that these stablecoins are regulated, and you'll see why as you go forward. So in definition, stablecoins are a type of cryptocurrency pegged to an existing currency, like USDT. That is one of the most common stablecoins. So USDT is tied to the price of the US dollar, so its value is constantly at $1. And the SEC isn't the only agency that has taken keen interest, because you have something that is pegged to the dollar on one-to-one, yet it's not a government issued digital currency. So, and this is why by extension, the Federal Reserve Chairman Jerome Powell spoke about stablecoin regulation while testifying before the U.S. House Committee on Financial Services earlier this month. So Powell said that if if stablecoins are going to be a significant part of the payment universe, we need an appropriate regulatory framework, which frankly we don't have. I hope you can see that. Let me admit more guys to this session. So I hope you are taking notes and you can see why it is very important that these kinds of regulations comes in place, coming straight from the Federal Reserve Chairman, that is the Fed, right, Jerome Powell. As you can see, he said that if stablecoins are going to be a significant part of the payments universe, we need an appropriate regulatory framework, which we frankly don't have. So you can see they don't have even the US itself don't have a regulatory framework. That's why they're working on it. And the same extends to the EU, to Russia, of course, even to here in Kenya. That's what we are. But of course, we'll be talking about our local context later there, this particular session. So lastly, the Treasury Secretary, Janet Yellen, that's another key person within the payments and the banking sector in the US, echoed the sentiments recently, coordinating at a meeting with the President working group, that is, of course, President Biden, on our financial markets to discuss the rapid growth of stablecoins, potential uses of stablecoins as a means of, let's say that, as a means of payment and potential risks to end users. The financial system and national security according to. So you can see how this particular ecosystem is affecting all these platforms. So maybe I can just maybe take that as one statement for you to visualize that what you're talking about is not something small. It's something that is going to actually disrupt a whole lot of industries, as you can see over there. The rapid growth of stablecoins, potential uses of stablecoins as a means of payment, and potential risks to end users, the financial system, and the monetary security, according to the meeting readout. So this is what they are basically tagging around with. This is what they are trying to work around with. So what investors should know, or rather what you should know, nearly 3/4 of trading on crypto trading platforms occurred between a stablecoin and some other token in July. That is as per Gary Gensler, who of course had that has that information. While it's clear yet, while it's unclear yet what any regulatory action on stablecoins would look like, any regulation could impact investors who hold or use stablecoins as part of their strategy. So anybody who is looking to onboard the cryptocurrency ecosystem, at some point in time, they normally buy a stablecoin. That is what it's happening. Stablecoin meaning you're either buying a USDT, you're either buying a BUSD, you're either buying USDC. There are various kinds of stable cryptocurrencies out there. But the most common is the USDT, and of course the USDC and the BUSD. So crypto to crypto trades often incur lower fees on many exchanges than buying crypto outright. That is in US dollar to cryptocurrency transactions. So maybe as a point of note, in case you are looking to buy Bitcoin, usually you incur lesser cost when you're buying it using a USDT. Well, and then again, you also insulated from the frequent volatility of let's say Bitcoin. So as you can see over there, lower price volatility makes them potentially better option for purchases than transferring cash each time. Of course, they are also very cheap in transferring. Like, of course, if you look at the Tron network, that is one of the cryptocurrencies, it actually is cost, I think, $1 to send, whatever amount of USDT you're looking to send. So, of course, that is a huge disruptor in the normal ecosystem. So, but for investors, they are not a great source of value as more volatile cryptos like Bitcoin. If you are investing in crypto looking for long-term growth, experts recommend sticking with most established coins like Bitcoin or Ethereum. So I hope you take note of that. If you're looking to come into this ecosystem, of course you have to look at a long-term strategy. And of course, in this case, you are better off looking at coins like Bitcoin or Ethereum or others that maybe that we normally talk about within our sessions. So in closing this part of the stablecoins, In anticipation of any coming guidance, you should also make sure you choose a cryptocurrency exchange that maintains compliance with evolving federal and state regulators in the US. If you're in the US, this includes many established high-volume based exchanges like Coinbase and Gemini. So those are of course the two like platforms that Gary Gensler is recommending in the US if you are, because these are what we call regulated exchanges at the moment. For Kenya, I think you are better off with the likes of Beltrix. Of course, them they already have what you call a regulatory sandbox with CMA on how to operate an exchange. Of course, this industry is growing, so we are not yet out of the woods yet. Moving on, the other aspect of what affects these kind of regulations are what we call the cryptocurrency ETFs. So while the US government considers how to make it harder to use cryptocurrency for its activities and tax evasion, there are still no way for Americans to buy into cryptocurrency using more traditional investment accounts like those. Of course, if you're in the US, you know about Fidelity, or of course, maybe you've heard of it. These are very huge investment banks. Of course, for them, they are putting in a lot of money within the crypto ecosystem. So at times, they may choose to avoid buying Bitcoin directly or buying the cryptocurrency directly. They may choose to use another asset that is pegged to this particular cryptocurrency we're talking about. In this way, they are trying, of course, to lower down their risk. So same applies to Russia and, of course, the EU. So the SEC has yet to approve a cryptocurrency exchange in the US, despite several proposed funds from different institutions and exchanges. But Gensler revealed that they may be coming very soon. So in the US, there is no approved like an ETF fund to date. There's none. Of course, until an ETF gets approved, there's no really way to buy into a security that closely tracks the price of a specific cryptocurrency, says Jeremy Schneider, the personal finance expert behind the Personal Finance Club. That means the only way for investors to really do that is by buying coins directly from an exchange. So, of course, the ETF is just a layer that most investors would normally prefer because they are not fully exposed to the particular asset. So, while there are while there has been some confusion about whether cryptocurrencies are securities and the SEC regulation, Gensler made it clear. Let me just do that again. Gensler made it clear that every initial coin offering he has seen is a security. So anything that within the cryptocurrency that we've seen, I'm sure you've heard of ICO. ICO is just what we call initial coin offering. So he says all of them are securities. And maybe people here, maybe you may wonder why my focus is so much on SEC, that is the Security Exchange Commission, because most other governments out there usually mirror what the SEC is doing. It's like they are the first mover in terms of regulations. So most countries usually try and copy that. So it's very key to watch what they are doing. So generally, folks buying these tokens are anticipating profits, and they are a small group of entrepreneurs and technologies standing up and nurturing their projects. I believe we have a crypto market now where many tokens may be unregistered securities without required disclosures or market oversights. So that is what Gary Gensler believes. Anything that was initially offered is a security, which of course there's a big debate on whether Ethereum is also a security. So we'll yet to see how that will go. So, but in finishing that particular statement, Gary Gensler reiterated that the SEC has jurisdiction and our federal securities laws apply. That is, of course, in the US. So we have to see how the Kenyan part will play. So what does it mean for you? Again, cryptocurrency ETFs are not yet available in the US, but many may offer a way for investors to get into cryptocurrency without having directly to buy from an exchange in the future. If you look at, let's say now the EU, that is in France. So French asset manager Millennium Capital won regulatory approval to launch an ETF just, I think, I think it was in July. So tracking the price of Bitcoin for investors across the EU. So you can see EU, they already have an ETF. So the Paris-based firm received approval from the French regulators to launch the fund, and will track a basket of up to 30 stocks with a 90% correlation to Bitcoin price, according to our email statement on Wednesday. So if you want to read about that news, you can share the link on the chat, so that you can read more on that. So that was the particular news that says, you can see among the stock fund will track Agro blockchain, Riot blockchain, and of course Galaxy Digital and Voyager. So there are very many companies or other platforms in the EU now offering you such services. So if you're interested in crypto, these funds could help you to diversify your holdings across different coins, like conventional ETF, or index fund. So of course, before going there, Decrypt is here to guide you on basically on how to do that. So in closing, you can see they are still just as speculative as any crypto investment, that is a ETF. If you are waiting for Bitcoin ETF because you are unwilling to take the risk, you may want to reconsider whether crypto belongs in your portfolio at all. So in the meantime, Gensler stands that every ICO is a security, would mean investors should look for SEC protectors as regulation becomes more concrete as we go by. So I hope we are following. I hope we are following. Remember, if you have any questions, please remember just to ask on the chat. And in closing, because I think this is where I'll be ending my session about regulations. So in general, cryptocurrency regulations is best viewed as a necessary evil. As you can see that crypto regulations is best viewed as a necessary evil. If the industry is to grow, investors need confidence, as they are not inadvertently supporting money laundering or unwittingly but participating in fraud. I mean, no one really wants to participate in fraud, but of course they want to take advantage of this growing ecosystem. I'll be showing you that particular link about Nigeria, because I think it's good to know where are we in Africa in terms of regulations, because I mean, this is home, so we need to know where we are at. And I'll be talking briefly about Nigeria, because I think Nigeria recently was ranked the most in terms of volume and in terms of use in Africa in terms of cryptocurrency. So in closing, as cryptocurrency becomes more mainstream, authorities want to control it without destroying it, which is why legislators across the world are trading carefully. They want to protect consumers and avoid the negative aspects of cryptocurrency, but they don't want to wipe out a disruptive industry that has changed money, currency perception, its use, store, and exchange. So I think that basically does it for me. Let me just share this last part of Nigeria, because I think I found it really interesting to end this session about crypto regulations. So you see, in Nigeria, they actually asking how can crypto help Nigeria's economy. So from hedging hyperinflation to lowering the cost of cross-border remittances, crypto can improve financial inclusion in Africa's largest economy. And of course, that is not excluding Kenya, Tanzania, Uganda, of course, South Africa, and Ghana. It's only that Nigeria is taking lead, and for that, of course, you have to commend them. So what really caught my eye was this last statement here. I can share the link on the chat before I look at the questions. So you can see over there, regulation needed, but crypto assets by themselves will not be an all-encompassing. Let me just zoom that in so at least it's more visible from your end. So, but crypto assets will not have an all-encompassing impact on Nigeria's economic challenges. Better regulation is needed, said OCDIA of FBN West Merchant Bank. Questions remain around transparency and crime prevention. My view is that these challenges are solvable, but would require regulatory interest. And I think that, of course, is really, for me, it's a very good approach. The approach has varied widely across countries, but I think Nigeria's case, it might help to create a structure where the regulator has clear oversight of end-to-end crypto-based transactions. This will enable rather the continued crypto user adoption and increasingly divert demand from the nation's foreign exchange currency reserve. So still, a post-pandemic Africa must begin to develop its blockchain industry. The technology adapts to meet our unique Nigerian market, of course, Kenyan market as well, including financial inclusion. I think that was a very good ending for this session about regulation. So let me have a look whether we have any questions before I go to the news. Let's see. So let me see. So Baba's okay, how about Binance? Yeah, Binance at the moment. Let me see what actually you mean. I had Coinbase and Jeremy. How about okay? Binance at the moment they have no local presence. They have no local presence because they operate on a. It's like they don't have a direct approach to this particular industry. But of course, they have come out to say that they want to be regulated, and we'll yet to see that how it goes. So it will be very difficult for any government or other institution to regulate this industry. That's why it needs a clear way of like a soft approach, not a hard approach. That is what I think I can say. But Binance is open for regulations. That is what I think I'd want to say. So let me see if there's any question. So remember, just feel free to ask any question. That was the first part of our session. If you have any clarification, let me know on the chat. So thank you everyone for listening in. I hope you are finding value. So let's go to the last part of the news. Let's see what what stood out within the week, and then we'll of course come to the end of the session in like 10 minutes. So again, I urge you, please ask any question. Don't leave here without you getting to getting clear about what it is that you're talking about. So let me go ahead and share my screen again about the news that stood out this week in terms of what, of course, cryptocurrency, Bitcoin, and all the rest. So let me go ahead just a minute. Then I share my screen. Yeah, so I hope we are all finding value. I hope we are finding value in all this. I hope you're finding value. So just a minute, then I get to share my screen. Then we'll call it a day. So just a minute. So we do this every Saturday at 10 a.m. in the morning, just to give us a guidance and of course updates on what is has been happening and what to expect in the coming few months. So I hope you can see my screen right now. I've just shared that. So first news, I think in line with what I just talked about, you can see there, Putin orders Russian government to clear checks officials with crypto assets. So President Vladimir Putin has asked several ministries and central bank to verify information provided by government employees about their digital asset holdings. The order comes as part of a new plan to combat corruption, which was recently approved by the Russian leader. So of course, that's what I was talking about. Russia is actually aligning in a serious way in terms of crypto regulations, and that's why any country out there, of course, they don't want to be left behind. And of course, I think another interesting news that you can see why regulation is very important is this one about. I'm sure most of us heard about BitConnect. BitConnect was one of the first Bitcoin scams that actually people lost a lot of money. So SEC obtained judgments for $12 million against BitConnect promoters. So the U.S. Securities Exchange Commission obtained judgment against promoters of BitConnect crypto Ponzi. So I don't know who here in this group, or rather in this session, heard about BitConnect. I think for me, I heard about it in 2016 actually, or 17, about BitConnect. And of course, they were talking about on how high the price is going to go, but for them, they didn't have any use about their cryptocurrency. It was just a hype. So the litigation release published on 19th August indicates that SEC won $12 million from BitConnect's Michael Noble and Joshua Jasper alongside. So this good, as you can see, they cannot be prosecuted without any guidelines. So just before the 2017 bull run, a digital currency-based pyramid scheme called BitConnect started in 2016, allowing users to learn BitConnect coin for high yields. So you can see there, the key is high yields, and that's where people mostly lose their funds. But of course, I'm happy to see that they are being taken to task. Another news: 99% of what Fidelity's biggest clients are asking is all about Bitcoin. So Bitcoin has become the main focus for digital assets division of Fidelity Investments firm. Of course, this is one of the biggest banking institutions in the US. So Bitcoin has become the main focus for digital assets division Fidelity Investments. In an interview with Boston Global, Christine Sandler, head of sales and marketing for Fidelity, said that that 90% of Fidelity's biggest clients were asking about Bitcoin. 90% of its biggest clients were asking about Bitcoin. So Tom Jessop, president of the digital asset business unit at Friday, told Boston Global that the company is making long-term play on the emergence of a new kind of financial structure around Bitcoin. I hope we are all seeing this, that when such big institutions are basically aligning themselves, of course, you have to think about how are you going to be part of this ecosystem, despite the whole news that is going around about how it is backed by nothing. It is all sorts of information. So on the growing institutional adoption of Bitcoin, just of saying, you are seeing the emergence of a real asset class. I love that. You are seeing an emergence of a real asset class, and this is actually these are the same banks a few years ago who are, of course, they are not actually. They didn't want even to hear about. In fact, they used to close people's accounts in the US if you were seen to be transacting in Bitcoin. So when asked about supporting other altcoins, Jessop responded, "I don't think they'll ever be the most full service provider in terms of asset coverage. Fidelity currently mines and custodies Bitcoins for institutions for its safety, soundness, and security." Yeah, I think that is quite huge coming from such an institution. In other news, cryptocurrencies are here to stay, says Colombia's University Investment Arm CEO. So the president of IMC says that the cryptocurrency industry will have profound effect on finance. And I think that I couldn't agree with it more. So the Colombia Investment Management Company, IMC company, president CEO Kim Liu sees crypto as more than just a fund, saying the industry is clearly here to stay. So you can see there, what role, let me just zoom that in a bit, what role will crypto play? In an interview with Bloomberg Wealth, Liu gives her take on investment potential of cryptocurrency and new possible directions in which the flourishing industry may be headed. So she says, there are different avenues that it can go. There are stablecoins. I think we just talked about stablecoins today. There are NFTs. There's just the blockchain. There are different layers. People are using it for so many different things. So despite its many possibilities, there are specific niche the crypto space will ultimately fulfill as is still a mystery. So he says, she says, and as I give a summary, I think clearly it's here to stay. I think clearly it's going to play some role. Not clear what role it will play. For us, it's important to double a little, just to make sure we follow. Make sure that we have relationship with people who are going to develop expertise, and we can leverage those expertise and decide which way to go. So of course, these are very smart company. These are very smart. Of course, it's called Columbia Investment Management Company. That's a whole university that saying crypto is here to stay. So of course, I hope you also taking cue. So Aussie Green Bitcoin miners Iris Energy files would set to go public on Nasdaq. So Australian green Bitcoin mining company, it's called Iris Energy, intends to become public by filing with the US Securities Exchange Commission. You see why I was very keen on SEC, because they are a key player in terms of regulations, in terms of giving a clear headway on which way cryptocurrencies would go. So the number of cryptocurrency-related companies aiming to go public to increase with the latest number being Iris Energy Pty. So of course we saw Coinbase recently going public, and that is a crypto exchange company. So the firm that is now Energy Pty, focused on green Bitcoin mining, has filed with the US regulators for a direct listing on the Nasdaq this year. So it's a Sydney-based company. Of course, this is what I say, the ecosystem is growing. It is getting more and more regulated. Of course, it will now allow more people to have confidence in it, because confidence is the key thing in anything. So moving on, we cross over to Japan. So Coinbase, as I said, is one of the first companies to be regulated, and also that is trading publicly on the stock exchange in the US. So Coinbase is launching a crypto exchange in Japan with financial giant Mitsubishi UFJ. So crypto exchange Coinbase is entering the Paris market through its partnership with the. Sorry about that. Let me just close this. These adverts at times can be annoying. So Coinbase says in an announcement on Wednesday it's launching a Japanese market as part of its global strategy. Of course, it's one of the largest markets by crypto trading volumes, that is Japan. And of course, for any company looking to expand, you have to look at where your big market is. So you can see over there, in line with the global strategy, we will aim to be the easiest to use and most trusted exchange in Japan that's fully compliant with local regulations. You can see everything is aligning on regulations. The firm said in a statement that that's why we are so excited to announce our partnership with MUFG, one of the largest banks serving 40 million Japanese customers. I think that is quite a huge step coming from Coinbase tapping into the Japanese market. Towards the end of the session, I think we're almost coming to an end. Australia's and Singapore conclude digital verification blockchain pilot. You can see these are the actual use cases that are currently being tried out on the blockchain, of which some people they think blockchain is just something over there. You can see companies and countries testing their products. So a 9-month blockchain initiative assessing the cost of time and efficiency of 2 countries' digital verification system has been deemed a success. I think that is quite huge. That was, of course, a trial conducted between Australia and Singapore. And those are 2 very big economies actually by scale, which is actually it's a keen step. So the Australian Border Force (ABF), Infocom Media Development Authority of Singapore, and Singapore Customs, along with other industry representations, have concluded a trial project analyzing the status of countries' digital verification system in issuing and verifying trade documents. I think that is actually that's very good coming from those 2 particular countries. And I think with that, I think basically sums up my session. Unless there's any news that I missed, I think there's only one. Let me see whether I can get it. There's one that I saw earlier about, of course, not all news are positive. We have some positives. Let me just see whether I can share one as we conclude. So remember, if you have any question, if you have any comment, just drop it in the chat. Let me just retrieve that particular news item. Then we get to close our session today. I hope you are finding value. I hope you are finding value in what we are doing here. Our question is just to ensure that we are guiding you, onboarding you on a sober manner, on a informative manner, whereby you not come with very high expectations. And of course, when they're not met, people tend to say that I was conned or I was I got into something that I was not told all the possible upswings and pricing. So let me just, there's just one news that I wanted to share, then we can call it a day. I'm just trying to retrieve it. Just give me a moment. Because it was, as I said, not everything is rosy in the crypto ecosystem. Not everybody has positive news, rather positive tech. Let me just moment get this particular. No, it's not opening. So let's see. Where is it? Then you can come to a close. So I hope, as I said, please ask any question. I like when people ask questions. I think it tells me that we are on the same page. At least we are all following. If not, just taking notes. Let me just tell you I've got it. Let me open it. The last news item. Then we come to a close. So, in a moment, I'll be sharing my screen. Well, thank you very much for being here, for being patient. So share screen. There you go. So I found this interesting. As I said, not everybody has all the positives. So this came from Federal Reserve Bank President, of course, from one of the states. He says Bitcoin has no legit use. Bitcoin is 95% fraud, hype, noise, and confusion. So I don't know, based on what you have shared, do you think this, of course, everybody is entitled for their own opinion, but of course, this is where now you have to look at things in a sensible manner. So Minneapolis Federal Reserve President Neil Kashkari says crypto is 95% fraud, hype, noise, and confusion. He added, I've not seen any use case other than funding illicit activities like drugs, prostitution. Of course, I can tell that he's coming from a misinformed aspect, but this is why now people need to understand that you need to get to know the right information. So I think that basically ends my session. I enjoyed this session actually. So if you want to follow us, let me just share our Telegram channel on this on the chat. I'm always available. It's always Lawrence and myself, but Lawrence today was not able to attend. But since I'm here, I want to thank you very much. Always you can reach out to me via all these channels that we have, and I want to thank you very much for this session. So thank you very much, Simon Toto. What's the way forward between Ethereum and Bitcoin? So that is what Simon Toto is asking. So Bitcoin and Ethereum are two different blockchains serving two different markets. Of course, I'd want to compare with, let's say, water and oil. Water and oil can never mix, but they are all very important, in our livelihood. So Bitcoin has its own trajectory. It has its own use cases. It has its own benefits and also disadvantages. Ethereum as well has its own use case. It has its own blockchain. So they'll never conflict. They'll never compete. They're all, I can say the word is they are all complementing each other. So that's the beauty about crypto. It is a decentralized system. You don't need to be head stuck on one particular platform. If you're not happy about Ethereum's blockchain, you can choose Bitcoin and many other, I think more than 8,000 of them out there. So you don't need to be head stuck with one. But thank you for the question, Simon Toto. I think that at least offers clarity on the kind of cryptocurrencies that we have. So any other question before we come to a close? I'm just trying to share our Telegram channel, because that's where we normally post every day news updates and where the market is heading, just for your information and also your knowledge and understanding. So let me just share the Telegram channel, because that's where you'll find most of our news updates and everything that you may want to learn from us. So just check on the chat. If you have any, or rather, if you want to learn more, you can always reach out to us. So let me just share that on the chat. Okay, so there you go. So thank you very much, Valerie. So it probably holds millions in yes, of course, people who talk about cryptocurrency at times, they may be misleading people. So it's very important for you to watch what they are doing. Don't listen and follow. Just look at what they are doing and do your part. So with that, I think I've shared the link on the chat. Another question has come in just before I go. Where is the best place to store my coins? USDT is one of them. Others. Okay. So Simam Toto, one of the guests here today, is asking where or how can you best store your cryptocurrency holdings. So you need to define yourself. Are you an everyday user? Are you a long-term user? Are you like using crypto for payments? So number one, if you are looking to store cryptocurrencies for the long term, don't ever store them on an exchange. That is number one. Don't ever store your cryptocurrency on an exchange, because an exchange, as the word clearly says, exchange. You are there to exchange, not to store. So I think that helps you. If you are looking to store Bitcoins for the long time or any other cryptocurrency, look for a offline wallet. I think last week, I think Lawrence covered about types of wallets, and I think, yeah, thank you very much, Valerie, for that. Cold wallets are available. So we are going to, actually, we are talking to a few industry players, and we're going to avail these cold wallets in Nairobi very soon. That is what I can say. So, of course, cold wallets are basically what you call hardware wallets. They are similar to a hard drive. It's basically like a flash disk, whereby you just, it's like the way you store your document. When you store a document on the flash disk, it's offline. So that's where you can actually do. So there are very many ways of storing cryptocurrencies. But number one, if you are looking to store cryptocurrencies for the long term, don't use an exchange. Get to store them offline. You can use maybe a trust wallet. You can use maybe a paper wallet. You can actually print that particular address. There's a whole topic into that. But I hope that answers you, Simon Toto. So again, thank you, Kevin, Baba, and Mamba. I don't know who that is. Agnes, Valerie, Thuo, and Giuliani. So how do you open a trust wallet? So I can just let me share a link quickly on the chat on how you can go about opening a trust wallet. Everything is online, but just remember that always you must use your private Wi-Fi. Don't use public Wi-Fi, because if you use your public Wi-Fi, any info that you may be logging in onto your device may be compromised. So let me just share the link on the chat on that one, on where you can get a trust wallet. Let me just do that right now. But I want to thank you very much for asking this question. It's actually helping us to learn more. If you ask me, because you may be having. So I've shared the chat, the link to the trust wallet. If you're not sure on how to go about, always reach out to us. Then we can help you go about opening a trust wallet, because your security is very important. Because anything that is, if you're hacked or if you're compromised and Bitcoins are withdrawn, there's no recourse. It's a gone. Those are your gone assets. So I think we allow me to end there. It's 11 exactly, so we are right on time. So thank you very much. Have a good weekend ahead, and remember, stay safe, and let's keep learning. That's the best way for us to grow. Always learn. Be open to learning something from somebody new. Let's be